All right, guys, today we're going to talk about what I think is maybe one of the most underutilized financing tools, maybe in all of real estate, something I wish I did with my first home, and now you can do to get a lower monthly payment and a better rate on your mortgage. Let's jump in. So in my opinion, one of the most underutilized tools are ARMs. Now, what is an ARM? Lenders will typically do 5-year, 7-year, and 10-year ARMs. ARMs are just like a 30-year mortgage, but instead of locking in your rate for 30 years, it only locks your rate in for either 5, 7, 10, whichever timeline you approve. Now, obviously, it might sound better to have a rate locked in for 30 years. Well, what's the benefit to you? Well, if you're not making a bank commit to that percentage, that loan number for 30 years, they're much more likely to give you a better rate. It could look something like this. Let's say 30-year loans are at 6%. You might see a 7-year ARM at 5.5% and a 5-year ARM at 5%. So really depends on the client. If I have someone coming to me who wants to buy a property and turn it into a rental when they move out, hold on to it long term, I'll probably steer them away from ARMs, probably steer them towards 30 years. But a lot of clients I work with will buy a property and tell me right out the gate, we want to use this to build equity. We want to use this to get out of renting as fast as we can, jump into something, and then in 5 to 7 years from now, sell it and have more equity. So for a person like this is a way better option than a 30-year mortgage, in my opinion. So I'll have clients that'll ask me, Dave, what if I do a 7-year ARM and then I stay for 10 years and rates have gone up? Well, you could still win. First of all, if rates stay the same or go down, then you've definitely won doing an ARM. But even if they go up, you can win. And here's an example. Let's say you call and your lender, your bank, and a 30-year mortgage is at 6%. Let's say a 7-year ARM is at 5.5%, and you do the 7 years at 5.5%. Let's say you end up staying longer than 7 years, you end up staying 10 years. Those last 3 years, rates aren't even at that 6 anymore. They've gone up to 7%. Well, what's basically happened is instead of locking in at 6% for 10 years, you've paid 5.5% for 7 years and 7% for those last 3 years. But when you average out over those 10 years, you still ended up paying less in interest than 6% per year. It's a little bit of math there, but you could figure it out. So anyways, no matter what your situation is, if you don't think you're gonna own a property for 30 years, it's absolutely at least worth inquiring about what your options are for ARMs. What's really important to remember is sometimes lenders like doing 30 years. It locks you in for a longer time. Sometimes it's just simpler on their end. So you really need to advocate for yourself. I don't care what type of loan you get, but my one thing that I ask you is make sure you ask when you call a lender, a bank, whoever it is you're getting your loan from, say, hey, what are your 30-year rates and what are your rates for 10, 7, and 5-year ARMs, and do you do any other special type of ARMs with unique rates behind them? Make sure you get all your information so you can get the best rate. Have a good week.